All right, hello and welcome everybody. Thank you for tuning in to today's cryptocurrency webinar for financial institutions. My name is Jamie Terrell and I will be your moderator for today. We have a lot of interest in today's topic, so we are going to dive right into our presentation. I do just have a few quick housekeeping items to mention. First, everyone on the line has been muted to limit disruptions. If you have questions, you're welcome to share them with us using the questions feature in your GoToWebinar control panel. And if we have time at the end, we'll go over some of your questions together. But if not, we'll follow up with you after the webinar. Also located in your control panel, you'll find a few handouts related to today's topic, cryptocurrency. These will be included for you in our follow-up materials as well, which you can expect to receive by email in the next 24 hours or so. That'll include a link to replay the recording and our slide deck as well. And then finally, upon leaving, you'll be prompted to complete a very short survey. We do take a look at this feedback. It's very helpful for us to tailor our content and programs based on what you find to be of interest. So take a moment to share your feedback with us on your way out. We would love to know what you think of today's presentation and our speakers. Additionally, what topics you'd like to hear from Saltmarsh on in the future. So at this time, I'd like to welcome Paul Allen, shareholder in Saltmarsh's Financial Institution Advisory Practice, to join me and introduce today's speakers. And from there, our program will begin. So over to you, Paul.
Thank you, Jamie, and thank you for joining us this afternoon. It's such an honor for us to be able to work with bankers across the United States and talk about the emerging trends that are happening in the industry. And it's especially a great opportunity for us to work with the best of the best of breed in technology vendors in serving the industry. And we're so pleased to bring you a presentation and a discussion about how Bitcoin will be intersecting with our banking industry in the United States. And to talk through that with us, we've got Jamie Bangs and Ryan Alfred from NYDIG, and they are quickly becoming, NYDIG is the foremost, the leader in moving forward the complex issues of custodianship and so forth. So very happy to have them with us. And Jeff Knapp is with Allied Payment Systems. Many of you already know Allied Payment, provide a significant amount of support to the banking industry in terms of payment solutions and creating rails. And of course, as you might suspect, they are coming together to help community bankers offer products and services in a very complex area. So thank you for joining us. And Tammy, thank you especially for doing this great presentation that you have. And I'm going to be quiet and sit back and see if I can learn about Bitcoin. So Tammy, thank you.
Thanks, Paul. It's a great pleasure for us to join you folks today. And I'll just go ahead and get started with our introductions of our companies. So as Paul mentioned, it is pronounced NYDIG. We get a lot of questions about that. NYDIG, New York DIG, but it's NYDIG, and that really kind of harkens back to our roots. We were founded by our parent company, Stonebridge Asset Management, as a subsidiary really to hold their cryptocurrency. So kind of I'll tell you a little bit of interesting information about our backstory. They were actually in the market for a custodian for their crypto, and they had partnered with Ernst & Young, their audit firm, to evaluate everyone in the space to see who would be an appropriate custodian for them. They could not find anyone that they were comfortable with. So that is the origin story of NYDIG. That's how we came about. They decided, hey, who better than us to do it the right way from the start? And that is really how we started in the industry. NYDIG does operate under the NYDFS with a BIT license and a limited purpose trust charter. We are audited by Ernst & Young. They provide both our SOC 1 and our SOC 2, which you'll find are very robust. We're financially robust as well. We absolutely have a fantastic liquid balance sheet, which will allow you to have the confidence that even though there's volatility in the market, we're going to keep our promises. If we offer something for sale to one of your clients, we're going to deliver it at the price quoted. Now, we are institutionally only focused, and let's talk about this for just a moment. So we have kind of two arms at NYDIG. We have our institutional direct investing. So that would be things that would include for instance, corporations and companies that want to have cryptocurrency positions. And on that side of the business, we offer, I think, 5 or 6 different coins, including Ethereum and Litecoin, a couple others. But on our platform side, which is really what we're talking about today, is where we partner with financial institutions like yours to deliver this as a service for their client, right? So in that instance, we only offer Bitcoin. So I'm kind of going to skip a little bit to the bottom there. I'm going to talk about why that is. So Bitcoin has this very long and settled track record as an asset, first of all. So we have a comfort level with the regulators, clarity from the SEC as this is an asset, not a security. So we feel like we are absolutely meeting all of our disclosure requirements on that. However, with Ethereum and other coins, we don't have that settled history. So that's really what's holding us back from offering any other currencies in this space. That's probably the #1 question I get. When is Ethereum going to be offered? And the fact is that from a disclosure standpoint, our firm is extremely conservative. You guys will find that in this space, that's one of the reasons that we complement the banking, the community banking space so well, frankly, because we are extremely conservative. So to that end, I'll talk just a little bit about our guiding principles, and I'll turn it over to Jeff to talk about Allied. So the first thing that we adhere to is compliance, right? You'll probably hear me today reference compliance 50 times, right? So because that is the #1 thing we think of when we're developing a new product or service, when we're talking about how we're delivering it to your end clients, and how we're working with your institution. So we are compliance focused. The second one there is also really critically important. It is a white labeled solution, meaning that we are in the background handling the custody service, but we don't have a storefront. We don't have a website. Your client isn't going to directly go to NYDIG.com to look up their balance. All of this is being facilitated through that local financial institution relationship, and that really helps the client reduce friction and have a comfort level in what they're doing, that they're not dealing with some third party that they've never heard of. And then the last one there is all of the products and services we talk about today are modular, and you can really choose what fits best as far as your risk tolerance and what your clients are asking about and inquiring about. So with that, I will go ahead and let Jeff chime in about Allied.
Thank you, Tammy. So hey, I'm Jeff Knapp with Allied, and I'm super excited to be in here to talk to you guys today about kind of what we're all up to as it relates to Bitcoin. So for those who don't know, Allied is a provider of digital payment solutions for community banks and credit unions, right? Kind of with the focus of essentially empowering community banks and credit unions to win at what we call the moment of truth, and that's when your users experience you through their mobile device to move money. And to that end, we built a platform, starting with bill pay several years ago, that's focused on real-time money movement and mobile-centric use cases. That's kind of grown from just bill payment to adding person-to-person solutions and account-to-account solutions, and a whole host of sort of digital document solutions. And now, we've partnered with NYDIG to bring Bitcoin trading to market, which represents 2 things for us. One is a really exciting opportunity to enter the market with something new, but also kind of a natural extension of the money movement platform that we built. And so appreciate you guys joining. I look forward to getting through this and having some great questions at the end. Thanks, Tammy.
Awesome. All right, so the next thing we'll talk about is really kind of what is Bitcoin, and I think that's what we really focus this webinar on for your benefit, right? We're going to talk about some things. There are going to be some people on this call that can barely spell Bitcoin, and there are going to be some people on this call that know more than I will ever know about Bitcoin, right? So we're trying to kind of cater to everybody and really talk through from a fundamental position about what we see as this emerging piece of our society. So when we think about the digital revolution and how it has completely transformed so many avenues of our lives, money can't be excluded from that conversation, right? So when we are thinking about communication, right, just communication, think about how different it is today than it was maybe 20 years ago or even 10 years ago. Who would have thought our almost entire use of communication would be through some kind of digital channel, right? I've got to tell you, 10 years ago when texting started being a thing, I thought, I will never become a texter. I'm not interested in being a texter. I love to talk to people. I'm an extrovert. I'm never going to want to text. And now I am probably one of the heaviest text users I know, right? I still, I use messaging a lot. I use Slack a lot. So this is the way we communicate, right? It evolves over time. So thinking about money in that same way, it's ready for the digital revolution. So we can start by kind of talking first of all about what makes money, right? What is money, right? And we have pieces of that we can look at through time to kind of identify what makes good money. And that would be things that are highly divisible, things that are portable, things that are hard to come by, right? A hard asset. So when we started using money many years ago, we were talking about things like cowrie shells, things that were naturally scarce, and you couldn't just go dig up more of them just like that, right? They were something that you could acquire, but not something that there was such an abundance of that, you know, it was just like dirt, right? Then we started having things like metal coins, paper currency. We only moved away from the gold standard just recently. So we've had a lot of transformation in the last like 200 years on the money front. It's pretty astounding to think that we only moved away from the gold standard in the 30s in the US. So we're ready kind of for that decentralized currency that Bitcoin can represent for us. If you look at sizing of today's money, if you look at the entire global currency, in its entirety, the US dollar makes up a good chunk of that, maybe around a little over 20% of the global currency. Gold makes up just a little less than 10% of that. And you can see there's a little sliver at the bottom that's Bitcoin. So it's kind of cool to think about it from a sizing perspective. But let's talk about it from a how it functions perspective. So if we look at the three pieces that we have on the slide here, Bitcoin, fiat or dollars, and gold, we can talk about like kind of these three categories on the left-hand side of the slide: trust, store of value, and accessibility, right? These are all elements that make for good money. So trust is an interesting one because we all think about, you know, kind of the government-backed dollar, right? And everyone uses that globally as a standard for many things. So Bitcoin is a little different. It's a decentralized but consensus-driven trust system, right? It's rules-based, meaning that we have, you know, rules in place that allow certain things to happen and force certain things to happen. When we look at the dollar against that, it's centralized with some democratic influence, right? So what we have with the dollar is absolutely, you know, government-backed and central bank-backed. And gold is a little bit different even from that, meaning that it's totally decentralized. We don't have any certain, you know, people that are telling us, you know, here's a piece of gold and this is its value, like it's market driven. The store of value is really interesting as well. So when we think about, you know, what's the supply growth for any one of these three, that's really a telling piece of this as well. So Bitcoin has a fixed supply of 21 million. That's as many Bitcoin as can ever exist. So this is really fascinating because I think this is maybe one of the least understood pieces of Bitcoin. It is a deflationary asset, meaning that no more can ever exist. We're on a path to zero. I believe it's 2040 when all the Bitcoin that ever will be mined, right? So then we just have the Bitcoin that exists and the value of that Bitcoin. Now, fiat is interesting as well. Before I came to work at NYDIG, I had no understanding of how many dollars had recently been printed, but that's a big topic of I guess discussion here because of inflation, right? This is really a pain point in our economy currently. The dollar continues to, we just continue to print more of them. And I think the recent health crisis that we all face, the pandemic, you know, caused that to even be more exacerbated. So when you think about how many dollars are currently in circulation and how many have been just printed since 1990, it's a tremendous point of inflation. Now, gold, on the other hand, is something that has been mined traditionally, but is only at about a 2% growth annually. The reason for that is because it's so expensive to mine, right? So certainly, you know, kind of three different angles on the supply growth. And now let's talk about accessibility because this is another huge deal. So Bitcoin is digital, right? It's digital native. It's something that is absolutely transferable and transmissible in a way that is completely free of any physical constraints. Now, fiat, on the other hand, with our dollars, we kind of have some of both, right? We have physical dollars and we also have digital dollars, right? We all are familiar with ACH, with wires, but also with some of the costs associated with those things, and frankly, the slowness of those things. And then gold really fails this test because honestly, you can't carry it around with you, right? It's heavy, it's difficult to divide. So definitely another kind of test for what makes good money. So let's talk for just a moment about the origin of Bitcoin. So when we talk about Bitcoin generally, this is again one of the lesser known pieces of this. Satoshi Nakamoto is the person or persons, the name adopted by the people who basically published the first white paper about Bitcoin. That was in 2008, and it's been running basically continuously for the last 11 years, right? We have over 700 million transactions completed at this point. So a huge number of transactions on the network. And how it works is via blockchain. As a banker, I think about this kind of as it relates to potentially a GL, right? So we all are familiar with GLs and how we balance those to zero and how that's a primary function of bankers, right? Keeping a ledger. This is a decentralized ledger in which people have to keep track of these transactions and do this basically in a decentralized but rules-based process. It's pretty interesting kind of when you get into the mining piece and into the transaction reconciliation piece. Essentially every 10 minutes another set of transactions is sent out, and then those miners add those to the block, and eventually that becomes part of blockchain and essentially part of the record, right? The system of record. So that is really a kind of an interesting way to think about it as a banker, as a decentralized GL almost. We'll also talk about how it is so deflationary, right? So it's really an interesting use case specifically for Bitcoin because it is a fixed asset, right? There are never going to be more than 21 million. They can never just create more. Because of that rules-based system, it has hardwired scarcity in it. Again, it's decentralized. This is hugely important, especially for people who are in the world, when we think about a global scale, in the world, in places where inflation is even a much larger concern than it is here in the US. And expanding adoption. That's really what we are focused on at NYDIG, is bringing this out to your customer and giving them the access and the ability to access this through a trusted channel and a frictionless process. So this is another piece, when we talk about sort of triple-digit inflation that some countries around the world are experiencing currently. I had the privilege of being at Money 2020 this week, and I talked to so many bankers from Latin America, from South America, from Europe, that are dealing with so much inflation in their country that they are absolutely clamoring for a way to put money into an asset that will not be tied to a central bank, right? But will be kind of external and exclusive to that. So when you think about inflation in this country, I think we have really been kind of, I guess, not exposed to the types of inflation that these other countries are dealing with, where literally something that would have cost $3 a year ago now costs $3,000. We're talking about your entire life savings kind of being evaporated because of the devaluation of your currency due to printing more of it. So this is the sort of thing that people in these other countries have been dealing with on and off for many years, and we're kind of looking at that and eyeing that on the horizon for the US and thinking, although we never, hopefully, will ever get to the position that an Argentina or Venezuela has experienced, but man, we've got to think about, a way to kind of differentiate a currency that will not, again, be tied to any central government. Definitely something to think about. Expanding adoption, I think I mentioned this a minute ago. We really believe in this at NYDIG. This is something that is absolutely part of kind of our founding and sort of one of our mission statements is Bitcoin for all. Giving more people access to this as an asset is something that's a driving force for our employees. We are so incredibly engaged in this specific piece of conversation, right? That this is something that can change the financial future for many of your customers. Of course, institutional adoption is off the charts, right? We've experienced so many investments from corporations in the last 6 months to a year, including many of the ones on this list that you're all very familiar with. The Lightning Network, I'll talk about just for a minute or two. I just want to kind of touch on this. This is something that I'm beginning to get a lot of questions about because people are kind of identifying, hey, what if this is the kind of the next thing coming down the path? The ability to potentially drive transactions and payments in a decentralized fashion that still was very secure. Right, so from a speed perspective and from a cost perspective, this is something that is really, really attractive. We've all been waiting for kind of the next thing from ACHs, right? For 40 plus years. And this is one of the things that we're just discussing, right, for the future, something that NYDIG is currently engaged in, but definitely something that, has yet to kind of get regulatory hold in our banking space. So something that we're thinking about and definitely talking about here. So you've got the right people on the line to discuss that. So let's talk about the future of the Bitcoin network, right? So this is something that I get so excited when I see these numbers because we really think about some of the principles that will guide where we think that it will be in the next 5 years. And some of that, it depends on how many people we actually think are going to hold Bitcoin, right? The value of the network is directly proportional to the number of nodes on the network. So that means if you have, 1 million people using it, it's X value, but if you have 10 million people using it, it's XX value, right? So really understanding Metcalfe's law as it applies to the network of Bitcoin is proportional to understanding its value overall. This is something that makes it an even more attractive asset when you think about kind of how we're approaching the US market. And we're not even talking about the global market here, we're just talking about the US market. We are so excited about the future and very bullish on what this means for our future growth in Bitcoin. So let's talk about why Bitcoin, right? Why is this the asset of choice? So we in the last few slides, we kind of identified what is it, how does it function, where do we think it fits in our, in our economy. Next, we're going to talk about kind of the demand for it and the business case for it. So, pardon me, guys. So we did a survey in conjunction with Ernst & Young earlier this year, and we determined with about a 2% margin of error that American adults, about 1 in 5 of them already owns Bitcoin. So let that soak in for a second. So when I talk to bankers, sometimes they come back and they're like, oh, that sounds really high. But I gotta say, in the last few months, that number has really gone down. Most bankers look at this and they go, yeah, that sounds about right. Based on the research I've done at my institution, this does sound right. And certainly if you even go as far as just polling the audience of your bank employees, you're gonna find that many of them already own Bitcoin. So what I always suggest to banks when we talk about this number is identify the actual market, right? So if you look at your data warehouse, if you look at your ability to do reporting and you go back maybe 3 years, 2 or 3 years in your history of ACH wires and card transactions, you're going to want to aggregate that over time for maybe the top 5 or 6 exchanges, as well as PayPal and Square. And why you want to do that is you want to quantify the opportunity there for Bitcoin because A, you're having disintermediation of deposits, right? So what that means is you can't lend against that money, right? This is something that's going off your balance sheet and you may never see it again. You have no insight into what's happening with that customer's financial health, how that asset is growing or appreciating or depreciating over time. All of these elements that are really important for a bank to understand about their client's portfolio. I would say additionally, another way to think about that number is to think about it in conjunction with the fee income that you could have earned off of that had you been able to offer Bitcoin as a service, right? So this is something that is so critical to quantify and have kind of in your pocket when you go up the chain at the bank to really help folks understand at the board level and at the committee level what the opportunity looks like. Critically important to be able to quantify that back to your board of directors. So the next two numbers are also really compelling because this really talks, I believe, it talks to the experience of customers with the exchanges. 80% of people that own Bitcoin would rather have it with their primary financial institution. 71% of those people would be willing to put up with the friction of moving financial institutions to have it all in one place. What this tells you is that it is a bad experience on the exchanges. I have to say, just recently, I read that Robinhood is opening a call center, and I had to I got a little ugly because I was like, how could a bank get away with that, right? You know, if you had no facility or network to support your clients, you would be out of business. If you had no ability to answer their phone calls or talk to them when they had an issue, that would quickly get out of control and you'd be shut down. So for them to not have any functional customer support, and how many years old and how many billions of dollars are we talking about there? So something to really think about in the customer experience and advocating for your customers is having that channel where your customers will be able to deal with someone when they have an issue. And I'll talk more about that in just a second. So of course, if we say 1 in 5 American adults already owns Bitcoin, then we have to think about the 4 out of 5 people that don't have Bitcoin. And why is that? So when we quantify the opportunity, of course, we're going to look at what's flown off, what's flowed off your balance sheet. But what we also want to look at is the potential upsell, right? The potential people who don't have it, and why don't they have it? And could it be a good fit for them if it was offered through their local financial institution? And the answer is yes. About half of those 4 out of 5 or 2 out of 5 would be very interested in owning Bitcoin, but one of these 3 categories, or perhaps all 3, are holding them back from making that investment. So the first is familiarity. I didn't talk about any of these jargon terms yet, but there are so many jargon terminologies within the Bitcoin space. If you ever turn on CNBC and you watch it for maybe 5 or 10 minutes, if they're talking cryptocurrency, you will hear many of these and probably additional ones that I didn't even make the list, like a node or an airdrop or a Satoshi. A Satoshi, just for everyone's benefit, is a 1/100,000th of a Bitcoin. I still get the question sometimes when I'm doing this presentation is, a Bitcoin was worth $60,000. I can't invest $60,000. We're not asking you to invest $60,000. This is all done fractionally. So these are the sorts of things that a local bank or credit union speaking plain English can really meet and not have any of these objections, right? If we just use regular English instead of jargon. The next one over is trust. I gotta say, this personally applies to me. About a little over 2 years ago, I got a prompt in one of my social media feeds to open an account with Coinbase. And at that time, I was crypto curious, as many of your clients are, and I went out and clicked on the link, and I started to open an account. I got all the way through the process until they asked me to hold up my driver's license and my passport and take a selfie with them. And then I was like, I'm out. I am absolutely not going to give this entity, who I have no idea who they are or if they're even US based, my PII to that detail, right? I gave them my address, I gave them my email address, but I was not about to take a copy of my passport and give that to them. It just wasn't comfortable. I remember it so vividly. I closed the internet browser out and I reached for my phone to Google who is Coinbase regulated by. So there are probably a lot of your customers that fall into that category that are interested and would like to learn more about it, but they are not going to trust their PII with a third party that is potentially unregulated. The last one on there is flexibility. I kind of mentioned the friction around the customer service process with the major exchanges. I have to say also, when you sell, you have to wait for that to come back to your account. When you buy, you have to wait for that to come into the exchange account, right? So there's a lot of time that is kind of, I guess, losing the inertia of the transaction, right? If I have to wait 3 to 5 days, boy, that takes the shine off of something, right? I want to do it right now. I want to sell that and I want to get credit right now. I want to buy that and I want to see that I have that right now. So having, not having that baked in with the exchanges is definitely one of the reasons and obstacles that people object. From a customer demand standpoint, I have two really great use cases and success stories that I want to kind of highlight for you. And I feel like these two really represent a unique and larger, or maybe a more urgent challenge for banks even than exchanges do. So when I talk to banks, if they have done any of the research that I suggested on, on the flows off of your balance sheet to the exchanges, they might have, done Coinbase, or they might have done, Coinbase and Robinhood, but very few of them will have aggregated the sales of Bitcoin in PayPal and Square, because typically we're still thinking about them as sort of payment companies, right? A P2P payment company, maybe a P2B payment company. But in reality, both of these are selling Bitcoin and doing incredibly well with it. So that's why I really want you to look over time, right? If you go back 2 or 3 years, you're going to be able to understand the trend there and understand and quantify the netting out of those P2P or P2B transactions of those numbers. So let's start with PayPal. So PayPal began selling Bitcoin in October of last year, and within 1 month, they sold Bitcoin to over 48 million users. So again, that number just has to soak in for a second, because the first thing I thought of when I read that number was, oh my God, how many people are even in this country? That's astronomical. And it is. The number is astounding. And frankly, the second bullet point down there, I think is equally astounding. 95% year-over-year growth in new active accounts. For an incumbent, that never happens, right? For any bank out there, from any financial, like a fintech company, that is just unheard of. So having that kind of growth in new active users is something to really set up and pay attention to. The Square example really focuses completely on their earnings. It looks like a hockey stick. It is up and to the right. Their earnings in 2020 were 9 times over their earnings in 2019. So they had a record earnings year in 2020. And for the first half of 2021, so the first 6 months of 2021, they beat 2020's earnings by 5 times. So we are talking about astronomical growth attributable to the sale of Bitcoin, the revenue generated, the transaction fees generated from the sale of Bitcoin. So certainly something to really think about from a business case perspective. And to that end, I kind of put up some numbers here for you guys to look at, and I'd be happy to talk to any one of you individually about this, but this gives you an idea. So what we have, the first number there, 2.6 billion, is what we see on average, on an average day for trading Bitcoin, the entire market. So we're talking about a global market. The daily Bitcoin volume is around 2.6 billion. The average transaction fee on these buys and sells is around 2.3%. So you might be like, well, hey, I'm a Coinbase customer and I have a transaction fee of 3%, or I have a transaction fee of 1.5%. There are a lot of stratifications in there as far as, what type of a customer you are on any given exchange. So don't get hung up on that, because we really average this out. There's some that are higher, there's some that are lower, but we're seeing it in the low 2% range. So extrapolating that over the course of a year, we would come out with a $21 billion pie, right? A $21 billion opportunity for non-interest income revenue. I have personally met with more non-interest income committees in the last 2 or 3 months than I even knew existed in banks, right? You guys are scrambling to find opportunities for your institution that are not tied to interest income. and I get it, right? We are in such a depression for interest over such a time period that really nobody could have predicted that it would be depressed over this amount of time. So what we need to do is find other ways, other lifelines for financial institutions, and this is one. My heart and soul is community banking, so I get really passionate and amped up when I talk about this. I feel like this is something that could absolutely keep community banks alive and viable over the long term. So what this non-interest income opportunity means for you is that you get a little fraction of that 21 billion, but it could absolutely make the difference for your bottom line. So on every buy and sell, a transaction fee is basically assessed, right? So if I buy $10,000 in Bitcoin, I'm really going to get a little bit less than that because we're going to net out that 2.3%. And that's the amount of fractional Bitcoin I'll get. So that 2.3%, we have negotiated with our partner vendors to split that with our financial institution, and all of the commercials or all of the payments to NYDIG actually happen through that partner vendor. So if you have questions about this, we can really drill into it personally, but that gives you an idea of kind of how the economics work. The last time I sold something that had this provable of an ROI was when I sold teller capture. So if that gives anybody an idea of how this works as far as our ability to predict when you'll become profitable, it's a pretty exciting product. So very briefly, I'm going to cover who NYDIG is or how we work. I already talked about who we are. So how we work with our partners is really via a set of APIs. And this next slide will have kind of an overview of who we partnered with, which is essentially everyone. On this specific call, we're highlighting Allied, and they have been an amazing partnership with us. Their customers love them. Their customers really believe in Allied as a service. And so we have really enjoyed our working with them and developing this alongside them. So we're very close to getting that live with their set of beta customers. So essentially the APIs allow Bitcoin as a service to function as a frictionless, seamless extension of mobile banking. So the best way I can think about describing that to you is like bill pay or like payment, P2P payments, right? So what I do when I'm ready to do that in my local Colorado bank is I click on my mobile banking, right? I go in there and log in. I can see my account balances. How this would look and live in there is probably something like a Bitcoin icon at the bottom of the page, right? So I would click on that Bitcoin icon. It would take me into the Bitcoin as a service piece, right? Again, it's white labeled. The look and feel of it is absolutely whatever your mobile banking experience looks like. You don't have to sign on again. You don't have to log into a separate app. You don't have to download another app. I don't know about you guys, but I hate that. So I love having something that's built in as a part of that infrastructure and gives me the comfort of knowing that I'm dealing with a provider that I trust. So if I'm ready to buy Bitcoin, I would click on buy Bitcoin, right? And it would ask me what account I want to take it out of. And then I would click on my checking account, for instance. It would ask me how much, and I would type in, $10,000. And then it would give me a quote that would actually net out those fees and give you an idea of exactly what that transaction would look like, right? Like X, 0.00 whatever shares of Bitcoin. So when you do that, you go ahead and hit, you'll get a quote that expires in, like 20 seconds. And when you click the buy button, it's executed, right? Allied does that for you. They send us the money and they debit that account in real time. There's nothing for the bank to do. It functions so beautifully and seamlessly for their customers. With other partnerships, you would put it in a, like a settlement account, and we would net settle every day with you. From a compliance perspective, I didn't really talk about this yet, but I got to talk about the compliance piece because this is my heart and soul. I've worked in regulatory compliance for probably the last 12 years. And when I saw the packet that NYDIG had put together with several leading law firms that specialize in crypto custody with institutions, I was blown away. It has over 200 pages of documents that really the financial institution can ingest and incorporate into your existing risk framework. So as you go through and you build your risk assessment, you can use this as your template, right? It goes through the entire process of, how do you look at this? What are your policies and procedures? We have a memorandum and resolution for your board of directors, a notice to your regulators, as well as that sample risk assessment. So robust from a documentation standpoint. I had a banker it was probably a month ago or so, tell me, Tammy, he was chief compliance officer, and he told me, Tammy, this takes a 6-month process and makes it a 6-week process for our department. And that's really what I would tell you. It's like 85% baked. You ingest it and incorporate it into your existing compliance processes, and you'll be off to the races. We have also pre-vetted with the regulators our terms and conditions, our receipt delivery, as well as our tax form delivery, so they understand how that works and how that will look like over time. And then the last one there I want to talk about just momentarily is our support solution. So we really feel like we're level 2 support for you, right? So, if you have a client that comes into the bank and is like, hey, we want to do that Bitcoin thing, how do I open the account? So those sorts of navigation sorts of things are definitely something that we feel like maybe your banker in the bank, or even from a call center perspective, could help them with. Okay, well, you'll see at the bottom of the page the Bitcoin icon. Okay, navigate here, those sorts of helps. But if it really goes beyond that, we feel like we're probably going to need to help you out. I don't know about you, but most banks don't employ a huge number of people that are Bitcoin experts. So having level 2 support for you that is staffed by a call center in Houston that is actually staffed by NYDIG employees. They're there from 7 to 7 Central. They're there for email, chat, or phone call questions, right? So we're here to actually facilitate and make sure that that customer is whole, that they have their questions answered and they're happy and satisfied. Additionally, on the support side, we have a great educational program to really help you at the bank market and internally market, right? Because you got to sell your bank employees on this, and externally market, right? So both things are important. I know I was an award-winning personal banker before I joined kind of a fintech years and years ago. And I needed 2 things to be successful. I needed to know it was something that my customers wanted or needed. And secondly, it was good for the bank, right? And if I had those 2 items, I could sell it and talk about it all day long. And that's what we want to help equip your folks with, is the understanding of what is this? Why are we doing it? Why is it compliant? Why does it work? And that people are already doing this. We're just providing it as an even more secure channel for them. These are our modular products that we're offering. And you can see the list of strategic partnerships that we have at the bottom there. I think we actually inked 2 more MSAs this week. So these icons, they're probably going to get their own page. We've got so many of them now. But the very first product we're working on right now with Allied and some of these others is the trading platform, which allows your client to buy, sell, and hold Bitcoin. Okay, so let me talk just a little bit about this. The trading platform, we are the custodian for your client's Bitcoin. The Bitcoin never touches your balance sheet. It operates in a closed ecosystem. So before I came to work at NYDIG, I had to understand this because I kept not understanding and not having clarity on why the regulators were okay with this, right? Because I was like, oh, I've only ever read the headlines, and the headlines are that, this is only for drug dealers, right? This is only for criminals. That's absolutely not true. And if we were worried about that, the first thing we'd look at is cash, right? So the fact is, just like cash, the vast majority of people that own Bitcoin are just like us, right? They're just people that want to diversify their portfolio. They want to have something that's deflationary as far as an asset goes, and they want to hold on to it because they believe it will be worth more in time. And that is what this trading platform allows them to do. So they can buy, sell, and hold Bitcoin. I always tell bankers to think about it in the kind of the framework of a digital safe deposit box, right? You can't sell it, you can't transfer it, you can't transact it. If I get ready to use the Bitcoin I have in there, I would sell it, and then that money would come right back to my bank account. That's all that you can do with it. The other products are kind of on the roadmap for later, including rewards, allowing your client to opt in for rewards, automatically investing those in Bitcoin. The upside to that is tremendous. We see a huge number of more swipes, more interchange revenue, more income for the bank on that. On the interest side, it would be you still paying fiat interest, but the client again opting in to receive that interest in Bitcoin. And then loyalty would be, kind of however you slice that, being able to offer a loyalty program in Bitcoin. I'm going to let Jeff talk to this slide really quick.
Sure. So, I mean, Tabby did a great job of explaining all the pieces, but like for you visual learners out there like me, I just wanted to highlight, one of the byproducts of the really tight, complete set of APIs that NYDIG has, and then Allied's ability to integrate tightly with online and mobile systems and experiences is that we create a really, really simple, kind of easy to use process that kind of goes back to that, moment of truth, value I talked about at the beginning. And so, as Amy said, you link in from a Bitcoin link in the mobile app and are, directed to a really simple page where you choose the amount you want to buy, which can be, normal amounts for normal people. It doesn't have to be a whole Bitcoin, you can buy fractional. And you select the account you want to buy from. That's it. Then the buying kind of confirmation screen, shows you a quote that we get from NYDIG that's good for 30 seconds. If you're good with it, you click confirm buy and the order's complete. It's that simple. And all the details of the transaction are available to you right there and sent back to you for, so you to have that to get that closed loop confirmation. And the sell process looks almost exactly like that in reverse. And so, we didn't want to create something that was super complex or required a lot of like fine print or disclosure. It's just really clean and the kind of thing that users are used to when they deal with in mobile transactions. So hope that helps kind of describe what it would look like through the eyes of your consumers.
Yeah, that's perfect. And that's really what we went for our API designs was, if you have to explain it, it's not designed well enough, right? So we really want to make sure that people, the vast majority of your customers at least will be able to really get it right from day one. They might have questions about the asset. They won't have questions about the actual flow of the transaction.
Yeah, one other thought to add is that all of this experience will be branded, under the FI's brand. Right, it's white labeled all the way through, and so it's an extension of your mobile banking experience, not somebody else's. Go ahead,
Okay,
Tim.
so I'm gonna cover like 2 more slides, and then we're gonna open it up for questions. One of the things that we get questions about a lot is the proprietary cold storage. So we actually hold the private keys for your clients in cold storage. Those are stored in on a server in a FSMA High site. These FSMA High sites are subterranean military grade facilities with armed guards. One of them has their own fire department. So we're talking about extremely secure physical security. But additionally, because they're in cold storage on this location, we've kind of solved for both the physical and the cybersecurity piece, right? There's no cloud storage, no network connection. Ernst & Young actually, visibly through closed circuit monitors these devices. So we have a really robust solution from a security standpoint. And then when I talked earlier about that closed loop, this is the regulatory and compliance slide that I was kind of talking to. We are the contractual provider of the Bitcoin. It never touches your balance sheet. It is that closed loop. So this is really answers the question for folks when they're like, why are the regulators okay with this? This is why. At some point, do we believe payments will be allowed and regulated and approved by the regulators to function in this space? We do. But it is not today, and we will offer that as an option for you when that comes about. So with that, I already talked about all of these, so I'm going to just pop it over back to Paul for questions.
Well, thank you, all of you. I suspect that along with me, all of us are just kind of blown away and trying to digest everything that you've talked about. It's a fascinating topic, and I agree with you. It's something that community banks need to start looking at right away. Jeff, if community banks wanted to get a feel for thinking about 2022 strategic planning, I'm thinking about initiatives, what's the rough time frame or timeline of rolling out something like this? And I won't hold you to this. I know that it's unique in each institution, but could you give bankers sort of an idea of what the rollout would look like or how long it would take?
Yeah, so I can give you a little bit of one. So, we're in the process of taking a handful of pilot beta customers live now. We expect to have, at least the first group of those able to process transactions, by the end of the year, and the other ones at least by the early part of 2022. And through that process, we hope to establish a scaled sort of onboarding process that mirrors the rest of our solutions in the kind of 90-day range from the time somebody signs up to when we can get them live. But we still have some learning to do. So yeah, I'm going to hold you to the not holding me to that 90-day thing, but it shouldn't take too long. It's relatively simple.
Completely appreciate that. And then I assume you're getting a fair bit of questions, both of you, from representatives of the different regulatory agencies. Can the folks that are on the line, can we reach out to you? Your emails are at the bottom of the slide that's currently presented. Are you okay with accepting questions and inquiries about how do I respond to this concern or that concern from my board or audit committee or regulators? And then in general, do you have resources at your website now that's, white paper kind of information or general information that bankers could look at?
Yes and yes. I'll jump in there and say, I get questions all day long, every day. But I will also tell you that NYDIG is extremely well connected to both state and federal level regulators. Ben Losky is our Chief Compliance Officer. He was formerly with the NYDFS as the superintendent. So definitely somebody who, knows a lot of regulators and talks to a lot of regulators. So, what I don't want you to think is that you'll be the first or only financial institution to talk to a regulator about this. That's not the case. We have spent a lot of time from the NYDIG perspective talking to regulators and helping them understand the solution and how the risk from this differs from an exchange. And we can absolutely answer any of those questions that come up. I'd be happy to talk to any and all of you.
Great. As we've discussed, while we love all of the largest 20 banks in the country, God bless them, they're great folks to have in our industry. Our client base are the community banks that provide great services to folks all across the country, and they likely will need maybe a little bit more help or support just in answering those questions. I know that some of the compliance folks and others might just be wondering what happens in the area of error resolution. Jeff, I suspect there's not, black and white error resolution procedures in place yet, but I'm assuming there will be something like that to deal with the inevitable oops in a transaction.
Yeah, so I think Tammy described pretty well, right? So what we would do as part of taking a bank live is train and empower their support staff to handle initial inquiry and kind of know where to go for deeper problems, and then Allied and NYDIG would sort of stand behind that as tier 2 for more complex issues, depending on kind of where they resolved. And both of our teams are kind of fully staffed to help the banks and credit unions through that.
Good. Any idea how many banks right now? I know Tammy, you had some of the slides with different folks, but how many banks in the United States actually have a live product right now? Is that 5 or 10, or is it 25? Any feel for that?
Yeah, I'd say, probably more than 10, but less than 50. We are working with a number of institutions that we will only acknowledge after the institution makes it public. We have an NDA in place. So two
Sure.
that I can mention, that have been in the news lately. If you talk about a large bank, we have US Bank. They just announced their custody solution. We are doing sub-custody for their clients. And then we also are working with Quantic Bank out of New York on a rewards program. I personally expect a flood of these announcements to come toward the end of the year about people either being live, going live, or intending to go live in the near future for their client base. We have several hundred folks in the queue with many of the names that you saw earlier on that logo that are kind of lined up waiting for the generally available solution to be rolled out for them to go live.
Yeah.
And I'll add one more thing. We had 4 banks go live just this last week.
Oh my goodness. We had one question come through just to clarify the issue of a wallet. To go through the situation with Allied and with NYDIG right now, would the customer need a wallet, or are you in essence the wallet for the customer?
Yeah, and they still own the Bitcoin, and we basically hold that in trust for them, right? We are the custodian for them. So they don't have like a hot wallet. It's totally cold storage with NYDIG. So yes, they have an address, a wallet, right? But they don't have anything that's transactable, if that makes sense. So if you think about a Coinbase situation where you have a wallet out there and you can give someone your address and your key, and they can, you can sell your Bitcoin like that. That's not the function of our wallet here. We do have an address, but we hold the private key in cold storage for you. Does that make sense?
Yeah. So Jeff, the customer would buy or sell through their app, their own app, right? The app through their financial institution, right? And then eventually, as Allied moves forward, I'm assuming you're contemplating actually being able to perform transactions such roughly similar to bill pay. In other words, I could choose to pay somebody using my Bitcoin account. Is that
well? So right now. Yeah, well, no, you didn't botch anything up. So right now, though, like the focus is very clearly on the sort of one-to-one closed loop of buying and selling, meaning, I have an account at the financial institution and I would like to buy some Bitcoin from that account at the financial institution. So I go through the process I just described to do that. If I want to do anything with those Bitcoin, I then need to sell those Bitcoin and they're sent back to the account in cash, and then I can do something with it. As the products and the capabilities expand beyond what Tammy talked about today, certainly, other crypto assets are being contemplated, as well as other use cases. But listen, right now, the most important thing is to help the financial institution sort of attract assets and begin to get users comfortable with Bitcoin and the community banking ecosystem. And then we can use that success to parlay into other opportunities.
I think all of the bankers in the audience just sighed a big breath, big sigh of relief to know that, first of all, the custodian's not on my balance sheet. I don't have to worry about the valuation of Bitcoin on my balance sheet. It's not affecting my capital ratios or anything like that. And then secondly, when I'm dealing with customers, while they can buy and sell Bitcoin, if they're going to do anything with that, they're converting it back to US dollars and then doing that transaction. So that is very reassuring, I'm sure, to all the compliance officers who are not worrying about where's that payment going and do we follow that money or what. It's being converted to cash and then it's back in quote unquote the normal payment and tracking systems. So good, very good. Well, I think we have about 2 minutes left, and I want to be respectful of your calendar, your schedule, as well as all of our attendees. Once again, thank you so much for coming on and sharing some information with our bankers. I think that all of the folks that are attending are probably going to start sending you emails and asking you questions. Our purpose at Saltmarsh in providing these opportunities is to really be able to open up a dialogue and introduce bankers to some great potential solutions for their bank to help them drive non-interest income. So Jamie, I think we have 1 more minute. Is there anything we need to deal with before we let everybody go?
Yes, thank you so much, Paul. And thanks, of course, to Tammy, Jeff, and Ryan for joining us today. We appreciate you all taking the time. Very informative session, very relevant topic, of course. So if you do have any follow-up questions, feel free to reach out to our speakers or reach out to any one of your Saltmarsh service consultants, and we'd be happy to help you. As I mentioned before, today's session was recorded, so you'll receive a link to watch the replay along with our slides, in your email inbox tomorrow. Be sure to check your spam and junk filters just in case it lands there due to security. We know that's of top concern, so we want to make sure you get what you need. If you have any issues with that, though, you're always welcome to reach out to us. And of course, remember to take a moment to complete our survey on your way out. Any and all feedback is appreciated, and we would love to hear from you. So thanks again for joining us, and we will see you next time.
Thank you, Tammy. Thank you, Jeff. Thank you.
Bye. Thanks.